If your charts look messy or you're not sure what actually matters, I'm going to show you the exact setup I use every day to take trades live, and you can copy it. This is not financial advice and meant for educational purposes. Trade at your own risk.
Hey, what's up traders? Welcome back to my channel. My name's Dave. Most people call me Butcher. And today the video that we're putting together is my TradingView setup, all the indicators that I use, the key levels that we're trading off of. Let's get into the video. Most traders lose because their charts are messy. This is the exact TradingView setup I use every single day. In this video, we're going to go over a bunch of key sections, chart layout, value area explained, and how you use it, previous day high and low with some real examples, anchored VWAP with my specific anchored timings, indicators, and trade markup process. So you can look back and reflect on your trades, build confidence in your strategy. If you want my exact templates and daily trades, check the links below. Join the Discord and get involved with the community.
Candlestick customization.
All right, guys, so let's get into it. Here we have YM on the chart on TradingView. I currently have my candles red and green, which, as you guys, if you know, you've seen the live stream, I don't usually use green and red candles. I just learned a long time ago that this can induce feelings about your trade. So the first thing we're going to do is we're going to customize the color of the candles. So you just double click on the candles. It's going to bring up this little window here. And typically I'm going with light blue for the body of the bullish candles, and for the bearish candles we do a dark blue, just like that. So we're just going to go through here, hook them all up to light blue and dark blue. There we go. All right, so hit OK and that'll be saved.
Quick action bar setup.
All right, guys, so the next thing we're going to take a look at here is your little handy bar that you can put up on the top here. So there's a couple key tools that you need to attached to this quick action bar. How you do that is if you go to the left side over here, you can see there's a bunch of icons on the left side. Click on this top one here. If you mouse over them, they will show what each category has. So this one is fib retracement, but let's just open this guy up here. So I don't use any Fibonacci's or any of these other levels, but this is just an example. So what we're going to do is we're going to come down to the fourth bar here. We're going to pop this guy open, and what we're going to do is see we have a long position, a short position, so you're going to star those ones up. You're going to come down a little bit lower here to the volume based tools. We have the anchored VWAP and the fixed range volume profile. Star those up. So once you star them, they will add them to that little action bar. For example, here, let's pull that guy over. If you wanted to add a position forecast to it, you just click the star button, and as you can see, it popped on there. I don't use this one, so we're going to remove it for now. So we got the anchored VWAP, the rectangle, the trend line, fixed range volume profile, long position, short position, arrow marker, and the call out. Let's just pop this guy back up here, keep it out of the way. And now that we've got that set up, just a quick rundown of what's going on the chart up here. Also, the very top left corner here, we have the contract that we're trading. Right beside that is the time frames that you can switch between. If you want to add some more time frames and whatnot, there's a little drop down arrow here. Just pop that open, and then you can put a star beside the ones that you want.
Indicators tab.
The next tab over here is indicators. So if you click on that, it's going to bring up a little search window. There's a bunch of different ones you can add. These are my favorites here. So any ones that I've added and I've enjoyed or liked, I just hit the little star button on them and it'll compile it there. Just search for your indicator in the bar and add it. If you like it, star it and add it to your list.
Chart layouts.
Moving on over to the right here, we have the layout style, 3 upright layout at the moment. I typically watch ES on the left, YM in the middle, and NQ on the right. There's other layouts though, if you wanted to have multiple charts, more charts. Keep in mind, depending on how many charts you want to have in your layout, you do have to have the higher level TradingView subscription. So just keep that in mind. You might only be able to do like 1 or 2, depending on which package you have signed up for.
Snapshot button.
So the next button after the full screen mode here is taking a snapshot. This is where you would take the snapshot and upload it to be able to save your markups so you can review them in the future. Typically, I will use copy image and then paste it into TradeZella, or copy it as a link. If you wanted to share it in a chat somewhere, you can send it as a link and then people can have access to it.
Value areas setup.
Now that we got the chart layout overview completed, the next thing we're going to be moving on to is our value areas, and we're going to go set up our value areas. So what you're going to want to do is go to your chart here. We're going to go to the 30-minute time frame, and this is pretty key. It's important for you to do that. Go to your indicator tab, which normally I would be searching for session volume profile, or SVP. Once you get that here, you're going to click on that, and that's going to bring it up on your chart. So now that we have the session volume profile on the chart, what we're going to do is we're just going to ignore this part. This is the developing volume point of control levels. We don't really watch this 2 key. It's something you can watch, but I use a different indicator for that. I'll show you guys in a bit. So what you're going to do now that you have the 30-minute time frame, you have your session volume profile here set up. One thing we're going to have to look at is the settings that we use on there. So if you click the little button on the side here, show drop down menu just below the buy and sell button, and it's going to show the indicators that you have for your chart. So session volume profile is a top one for me here. I'm going to click the little gear icon, which is going to bring up my presets. This is a little bit different from the standard out of the box settings. So take a moment here, pause the video and check out my settings. I'll quickly go through them. What we're going to do is you're going to do the session is all, volume is set to up and down, value area volume is 70, rows per layout, number of rows is what I use. The row size is 24. You could extend your point of control, value area high, value area low, but I don't do that. Then we're going to move over to style here. You want to have at least these ones clicked: value area high, value area low, and point of control. Those are going to plot all 3 of them. I think out of the box it comes only with the point of control, so you'll have to add these 2. Once you have all those set up and you have it on your chart, what you do is mouse your crosshair so it lines up with the line, hit the little plus button on the right hand side here and click draw horizontal line. You might need to adjust that a bit if you're a little bit off. So what you're going to do is just move it so that's in line. We're going to do it for all 3 really quick here so that we can just have them all on the chart. 1, 2, and 3. Just double click on one of those lines here, and then you can add a title. So I'm going to put POC. After you've labeled that up, you're going to go over to the style here. You're going to pick a color. I use yellow for my point of control. I really want it to pop so I know where that level is, really sticks out to me. So what you can do, guys, though, is, and I recommend this, is just double click on it or keep it open where you were. If you go down here to template, you can hit save as and then call it POC, which I've already done this before, so I'm not going to save it, but this is where you would just pick POC and then hit save, and then that'll add it to the drop down menu in your templates. I'm not going to do that right now, so we're just going to okay out of this guy. So it's a yellow, it says POC. So moving on here to value area low. Again, we're going to double click on that. You could type it in here, change the color. But like I said, I already have these set up here as a template. Click this little button here to get the drop down menu, value area low down here at the bottom. But we're going to click that. That's going to update the color. It's going to add the label to the line. We're going to do the same thing for the top one here. Again, template, value area high, hit OK. So now that we've got our value areas set up, I always end up doing my previous day high and previous day low here. So you're just going to click that little plus button again, draw a horizontal line. You're going to do it down here also, draw a horizontal line. The reason I like to do it at this time is having this session volume profile on the chart just helps you show where the top and the bottom are going to be, as you can see by the shaded or the different color area here. Next thing you're going to do is double click on the line. Again, I have a template set for previous day high. We're going to set that so it's like a bit of a gray color. It's just to quickly know the difference. Also, we're going to double click on the one on the bottom here, previous day low. One thing to consider here, guys, is the previous day low is lining up with your value area low. So it's kind of hard for you to line it up exactly. And if you see, you can put the label on the top or the bottom of your line. And if they were both on the bottom, they would be overlapping. So if you go to the text here, it gives you text alignment, top, middle, bottom, right, left, and center. So for example, if this was on the bottom, you would see there on the right that we are covering up the two words. It's hard to read. We'll just double click on it. We'll put it to the top and they won't be overlapping. All right, guys. So now that we have our previous day high, our previous day low, and our value area set, you can go over here and turn off your session volume profile indicator with this little I button. Click that I button, it's gonna take it away. When you want to use it, click it, it'll bring it back on. So we're gonna take it off for now.
Anchored VWAP.
And the next thing that we're gonna take a look at is the anchored VWAP. You're gonna click that guy, and what you do is just mouse over the time that you want to drop it at. And since we are setting up a blank chart, we're going to just go to the start of the day, which is, for me, is a 1500 candle. So right there, you're going to mouse over it. This would be your 6 p.m. Eastern Standard Time candle. So we're going to click that guy. I like to use this one as a red indicator. That's just a personal preference. You can set it to whatever you want, but try to be consistent with it. All you do is click on it. It's going to bring it your little action bar here, which is sort of a quick hotkey action bar. Click the color button here and you can switch it to whatever you want. The other indicator that I'm going to put on here is going to be our opening candle. This is a 9:30 a.m. Eastern Standard Time candle. I like to keep this one yellow. It's my most current VWAP. You can't really see it at the moment. As we get into the replay of our examples later on, you'll see how this ends up playing out. I also like to run my previous day New York VWAP. So going to your previous day at your 9:30 a.m. Eastern Standard Time candle, click it, drop it on there. I like to leave this one as a blue color. So we're going to hit our little hotkey up there and we're going to change it to blue. So now we have 3 anchored VWAPs. This one is a start of day VWAP. This one is a previous New York VWAP. And then we have our current day New York VWAP.
Fair value gaps.
All right, so now that we've dealt with our VWAPs, the next thing we're going to do is we're going to add our fair value gap indicator. So the one that I like to use is called FVG/IFVG. It's by Nephew Sam. Again, you can just click your indicators tab. If you search FVG, it should bring it up as one of the top ones here. Nephew Sam, you can just star it or click on it. It'll add it to your chart. I've already done that. I have it on the left side here. So what I'm going to do is I'm going to mouse over it. I'm going to hit the eyeball button to show it on the chart. And there we go. Now, if it shows a green fair value gap on your chart, that's called a bullish fair value gap. And here is a red one, a small red one here, which is a bearish fair value gap. So typically when you have a bullish fair value gap, you're looking for a price retracement into that level to find support before it goes higher, and vice versa with the bearish fair value gap above. Now, keep in mind, if you haven't learned about fair value gaps, you need to wait for a candle closure above or below the fair value gap, depending on if it's a bullish or a bearish fair value gap, for it to become an inverted fair value gap or invalidated. So now that we have our key levels set up, our indicators turned on, and our VWAPs attached, the next thing we're going to do now is we're going to play through a little bit of a scenario here. This is the most current trading day, so I'm not cherry picking. This was our last trading day, Friday at the end of the week here. If you're in the replay mode, there's a little button on the bottom here. We're just going to start clicking, go through the current price action, and we're going to build a strategy as we see the fair value gaps adding in here. We're going to plan our trade off of these fair value gaps. We only have one candle so far, and we're set on the 30-minute time frame. Interesting, the first 30-minute candle is a very bearish candle. So let's go back over here. We're going to hit the 5-minute time frame, as I like to be on a little bit of a lower time frame at the start of the session. We're looking for 5-minute fair value gaps. So if you, for example, this guy here is a bullish 5-minute fair value gap. This candle did not close below it. As you can see, it closed right there, which lines up with the fair value gap. Even though the candle did go below that fair value gap, you can see this is the bottom of that candle and it lines up below this fair value gap. That does not make it invalid, guys. You need to wait for the closure. So this is a great example here. The first candle pulled all the way back to this fair value gap. There was one in here that we had, but this one had already been closed below. As you can see, there's a 5-minute fair value gap here. We can just mouse this over here, just so for an example. We're going to add a little rectangular box, drag it across here. If you're looking for fair value gaps, how you find them is you need a 3-bar structure. So you have the top of the wick of the first bar, then we had the expansion candle. The third bar is the one that pulls back. So we basically have the fair value gap between the top of the first wick and the bottom of the third candle wick. That'll give you this level. So the reason that this level is no longer key for us is if you look at this price action here, we did have a 5-minute candle closure below this fair value gap. So we will take this guy off the chart. Just as an example, I wanted to show you that. If you want to move something really quickly, you can click on it. You can come up here and hit your little garbage can button to remove it. But I often just hit the delete button, just like that, and it's gone. So now here we have the first 5-minute opening candle pulled back directly to this fair value gap, found support. Pretty interesting, hey? So let's just keep playing the price action here. We'll do it one at a time. So we did form a bearish fair value gap there. Look at that. We found support in this bullish fair value gap. And our next fair value gap is going to be this one here that we're going to be targeting. We're going to be patient here and see how this ends up playing out. Again, our idea would be something like this. Let's just frame it ahead of time. We're going to be looking for a short position somewhere around the midpoint here, and we'll see what price does. If it gets up into this area or not, we'll be looking for a stop. So typically you'll be putting your stop to the high of the opening candle there. That would be our opening range high. Give it a tick or two above. So in this case, it's a pretty large stop, 107 points. And we can do a 1-to-1 risk to reward. So let's just set this to 107 there. So we're going to be risking 107 points to make 107 points. And let's just play this out and see what happens. Next candle opens up. Oh, so we went down and we closed here. So as you can see, the fair value gap on the left hand side, thanks to Nephew Sam's indicator, is now gone, right? It is gone because this candle closed down here, which is below the fair value gap. So that one has been invalidated. So let's just keep playing it out here. We are eyeballing this current fair value gap for a short position, and adversely, if we just continue to plummet, we can look for a reaction down at this other bullish fair value gap from the previous day's session. But this one is closer in the play, and this would be a key level potentially for us to enter a short. So let's keep the price action moving here and see what happens. So we did form a bearish fair value gap right there, but quite often when we have multiple fair value gaps like this, I would rather trade the one that has other confluences. For example, it looks like our entry area would be near the overnight VWAP, and we also have the 200 EMA there. So this would be a little bit of a better area for confluences if we're thinking about taking a trade. So keep that in mind. If you don't have added confluences to the fair value gap, sometimes it's good to just avoid trading those ones. Just be patient for a better potential entry, because we could potentially take a short here, but where do we put our stop? Our stop would have to be way up here, which would be too high. I don't think I could trust this as being our stop, so you'd have to go all the way back to the high. That would be not a very good risk to reward entry in any situation, because that's just too many points, right? So let's just keep the price action playing here and see what happens. Okay, so we did push back up into that fair value gap, but then it ended up closing above, which inverted it. So good thing we didn't take a short in that one. And let's just be patient here to see what happens on this next fair value gap above. Like I said, we have our overnight VWAP here and our 200 EMA. So we have multiple confluences that are starting to build up in this area. All right, let's keep moving on here. Next candle here. Okay, didn't do a whole lot. We had a bullish fair value gap that was forming there. And because price came back down and wicked all the way to the previous wick, they removed that. Next candle here. Okay, now we're getting into the action here. So if you want to find out where the 50% is of your fair value gap, you can shift click drag this up, this will give you a little indicator. They have a 50% bar here. So that puts us right around here. But keep in mind, guys, we do have the 200 EMA and the overnight VWAP. So I'm a little suspect that we might not be able to reach the 50% point. So let's just put our entry here right on the 200 EMA and see if we can get this entry on the pullback. We have our stop slightly above these highs here. You can pretty much put it right at the highs. If you get up there, you really don't want to be in this trade anymore. So it's actually 104 points. So we'll adjust our TP down here to 104 points. And let's play this out. Let's see if this is going to work out. Now that we're getting a bounce, we'll see if we'll get tagged in here and this fair value gap could work out. Moving on to the next candle here. Oh, all right. So we almost got tagged in there, but we didn't quite get filled. But this is showing that we're kind of pushing up here a bit. We have our volume kind of increasing there. Next candle here. Okay, look at that, guys. So we did get tagged in on the entry there. So we are risking a 1-to-1 risk to reward, 104 point stop to 104 point take profit. In this case, we could potentially target the lows, but we'll just do a 1-to-1 risk to reward here to see if this guy's going to play out. So let's keep moving on here. Next candle. Okay, bullish, back up towards our entry price. Next candle. Oh, look at that, guys. So we pushed all the way down. We did find some buyers support here at 48.245, but the closure is nice because we did close below the New York anchored VWAP. Next candle here. All right, almost at our TP, guys. Maybe we need to wait for 1 or 2 more candles to get that, but we almost got our TP. The bottom of this candle closed just above our take profit. You know my saying, don't be a D for a T. In other words, if you get that close to your profit target, I would definitely be dragging my stop loss right up there while this is happening. But let's just, for the sake of this video, continue on and see if our full TP would be hit. So the next candle's here. There we go. Full TP hit there. Pretty clean trade. We basically had no drawdown, only a tiny little bit right there. And we went to our 104 point take profit on this fair value gap trade. So there you go, guys. Just a little proof that these fair value gaps work. Shout out to Nephew Sam's indicator. It's awesome. I love it. I use it every day.
Trade markup.
So now that we've done this trade, we've set up everything. It's time for us to mark up our trade as to what we did on the day. All right. So the next step in the process here is going to be labeling our trade and how we took it. So we are currently on the 5-minute chart. What you're going to do is you're going to go up to your quick action bar on the top here. We have the call out button. What you're going to do is you're going to start it on the entry position, click it there, drag it up here, drop it there, click the text box, and then we're going to start adding the information that we need regarding our entry, the reasons, and potentially our exits later on. Basic idea here is price sold off at the open, left a 5-minute bearish fair value gap, patiently waited for price to retrace to the fair value gap. Entry criteria was to line up the entry with the other confluences, being the 200 EMA. So after you've broken down the idea as to why you entered it and the reason behind the price action, usually what I'll do is I'll add, let's say, for example, took 1 YM contract short. Stop loss was above previous high at 104 points, targeting a 1-to-1 R/R. All right, guys. So now that we got that in there, you can just move this around, set it up like that. Quite often what I'll do is I'll just drag this guy over so it shows exactly where the start of the trade was, and then also right where you're going to be ending the trade. So this was a relatively quick trade. Now, what you can do is just add another chat bubble back to the bottom here, right to your target. So closed the position of 1 YM short. TP was set at 104 points. 1-to-1 risk to reward. Now, this is a basic way to set up your markups after you've done your trades. So we've used our position strategy. We've set our risk to reward at a 1-to-1. And this trade would have taken 5, 10, 15, a little bit between 15 and 20 minutes to hit full TP at 100 points. Now, in the case that you were in this trade and you started getting some drawdown, what would be a good idea to add to your markup is another chat box and something like, I was feeling a lot of fear during this pullback, and I need to be aware that this can happen, but to stay focused and trade the plan. And let's just adjust this guy to here, just so it looks like if you had some sort of emotional feelings, you need to keep track of that also. That's really important. Not just the idea of the trade, why you took the trade, your entries, your risk to reward, why you're taking your take profit at where you were, but also to document how you're feeling through the trade. You know, if this trade, let's just say this trade ended up going to, you know, you put your stop at value area high, this trade ended up going stopping you out and then going to take profit. You can reflect on it that, yeah, I should have been above most recent high, and you would have not been stopped out. On top of the fact that that is how you felt about getting stopped out, especially after you see price going to your take profit. And you got to start to understand what that could do to your emotional capital as to whether or not you might overtrade, revenge trade, or whatnot. So let's just play out this price action a little bit more to see if we could have gone for a 2-to-1 risk to reward. In the case here, sorry, this was at 104 points, set that there. So then that would be a 208 points, which is pretty hard to get to that, but just for curiosity's sake, since we have so many confluences, could we do a 2-to-1 risk to reward on this? You could think about trailing your stop, maybe just above this VWAP here. But let's just play this out and see what happens with this price action to see if we could have gone to a full TP without getting stopped out of a 2-to-1 risk to reward. Let's just drag this guy over here. So we're almost at a full 200 point 2-to-1 risk to reward winner here. There we go. Look at that, guys. We got it. So we could have actually went for a 2-to-1. Now you can't always shoot for a 2-to-1, but maybe if you would consider this sort of an A+ setup, overall bearish, we've kind of like found resistance at the overnight VWAPs here. We did get our entry right in the middle of this bearish fair value gap. So there's a lot of confluences saying that this is a good trade. And look at that. We could have got a 2-to-1 risk to reward. But to be on the conservative side, guys, I would say just stick to your 1-to-1, right? 104 points. We would have been out of that trade by then.
VWAP break and retest.
Once we did break the New York VWAP here, we could have taken a short targeting a 1-to-1 risk to reward in the sense that we could do this, right? We got a closure down here. We put our next, now that we've taken the VWAP, we could look for a retracement to the VWAP, go with our stop above the highs over here. Also, we have some more confluences in the way. We've got the previous day VWAP and the New York VWAP and the 200 EMA above. So if we did that, we do a 72-point stop, do a 72-point take profit here, and we would have hit that TP pretty quickly. Also another 5, 10, 15 to 20 minute trade there. But that was just a little example on how you could potentially take another trade in the future, but using the VWAP. All right, guys. So thank you so much for watching the video. I hope you got some good information. I hope you guys are getting everything that you need out of my channel. I appreciate you guys. Thank you so much for tuning in on the live streams. You know, I'm live Monday to Friday, 9:30 a.m. Eastern Standard Time till about 11:30 a.m. Eastern Standard Time. I'm also streaming evenings around 10 p.m. Eastern Standard Time on Sunday, Tuesday, and Thursday nights. So definitely check out the streams while we're live. Hit that subscribe button, hit that bell notification so you'll be notified anytime I go live. And I'd appreciate a like on the video. So thanks so much, everybody, for tuning into the video here.
Lucid trading.
Just a quick note, I am affiliated with Lucid Trading. They're a great platform if you're a newer trader and you wanted to get into some fairly inexpensive evaluation accounts. They have really good rules, and the reason I say it's good for beginner traders, newer traders, is because they have a one-time fee type platform. The account that I would suggest for you guys to trade as a beginner is a Lucid Flex account. I would go with the 50K account. It has a profit target of 3,000 and a max loss limit of 2,000 with the drawdown type of end of day. You do have a 50% consistency rule in this, so that means you can only make 50% of the 3,000 per day. You can make 1,500 one day, 1,500 on the second day, and pass the evaluation, get into the funded stage. The good thing about these accounts is that they're one-time fee. So you only pay to buy the account. There's no activation fee once you pass the evaluation, and there's no monthly subscription keeping you tied to that, putting that pressure on you in regards to a timeline that you need to trade. You can trade these all year long if you wanted, just being patient. There is one rule you need to keep in mind, is that you have to take trades to keep it activated. I think you got to take a trade once every 10 or 14 days. You might want to double check information on that. If you go to their chat bot, you can ask all the questions about the rules. It's pretty awesome. They have really good support. So keep that in mind, guys. Once you pass your account, so once you hit the $3,000 profit target, you can click the button here, the funded rules. And here are the rules for the funded account. So your max loss is $2,000. There's no daily loss limit. There's no consistency in the 50K. So what that means is if you have a really good day where you make $4,000 in one trade or one day, you don't have to worry about that, because a lot of these accounts will have a consistency. Now, if you had a 20% consistency and you're shooting for a $3,000 profit target, you'd have to have a maximum of $600 per day to be able to qualify if you have a 20% consistency score. So 600 times 5 is going to be 3,000. 20% consistency times 5 is 100% consistency. That's kind of how you break it down. So the max size here is going to be 4 minis or 40 micros. That's more than enough. So there is one rule on this account, which is you have to have a minimum of 5 trading days with $150 of profit or more, and it's 5 days to the payout. And the other thing is, if you're going to become a live trader, once you get 5 payouts with these accounts, they'll consider taking you to live.
Top 1 futures.
Next on the list here, guys, Top 1 futures. They're also my favorite accounts. Now, these guys, I would say if you're a little bit more advanced and you're wanting to go straight to funded, this is the firm that you should be trading with. They have some evaluations here. If you're a little more advanced, you want to get straight to funded. They have the instant sim funded here and the Ignite instant funded. They're my 2 favorite. I don't really like the straight to funded Sim Pro account. Not that they don't work, but they have the trailing drawdown is intraday. So that means if you're in the middle of a trade and say you get up $1,000, but you end up selling it at only $500 profit, it does take away that $500 off of your drawdown. So that's why I don't really trade these Sim2 Pro accounts. But if you go the instant funded here, you have a $3,000 profit target with a trailing max drawdown of $2,000. The daily loss limit set at 1,250. The drawdown mode is end of day. 3 minis or 30 micros in this 50K account. And there's that 20% consistency score like I was talking about before. So you only want to make a maximum of $600 per day to pass this account to qualify once you hit that $3,000 profit target with a 20% consistency. And you can have 5 of these accounts at once. Keep in mind, I do have a discount code with these guys, MBT, Market Butcher Trades. All right, guys, and those are my 2 favorite prop firms right now to trade. They're very reliable, super fast payouts, great support, and their rules are very reasonable along with the rest of the prop firm space. And if you trade them patiently, you're bound to get a payout. And if you guys did notice in the top right corner of the video here, we got a little QR code. Earlier in the video, I had the Lucid QR code up in the top right corner. So if you're looking to get to those accounts quickly and easily, you can just use your phone on the video hit that little QR code and it'll take you directly to the place where you can purchase the accounts. And I currently have the top one futures QR code in the top right corner. Definitely use your phone for that one. Just follow that link and it'll take you directly to their site where you can pick up some accounts. And that concludes the video about how to set up TradingView and my overall strategy, the levels I use, the indicators I use, how to do markups. So I hope you guys got some value out of this. Just one more note, guys. I'd appreciate it if you subscribe to the channel, hit that bell notification so you can know when I'm live, and also hit that thumbs up, give it a like so that we can get this video out to more people. And check out the write-up in the video if you'd like to join the Discord. It'll be down in the bottom there. There'll be a link to the Discord. Join our great community. We have really solid people. Everybody's so happy, so positive, no trolls so far. Let's hope we keep it that way. We do have some reasonable guidelines in the chat. Just be friendly, helpful, and keep a good vibe going, guys. So thank you so much for watching the video. I appreciate you guys, and hopefully we'll see you on the next one. Peace out and have a good one.
Thanks for watching. Don't forget to like and subscribe to support the channel.